All right, what is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about Boyle. Okay, Boyle absolutely raged today. Okay, closed up 7.57%, but it was up as high as 10% or more throughout the day. We're going to break down the Elliott wave that I've been tracking on Boyle, as well as the cup and handle we have here forming. All right, things are going as planned as so far when it comes to natural gas. We're also going to take a look. This is on Thinkorswim. This is what I posted in the Discord. We actually hit the targets right here that I was looking for at 67.91. I actually did take a quick short position there. Was able to get some nice profits there, 44%. I think those at close were actually up about 66%. And we can take a look at UNG daily as well. All right, we're going to go over the daily structure here on UNG. You see we have this 1, 2, 3, 4, 5 up, with our wave 4 being an ABCDE, triangle correction. If we take a look here, the falling wedge as wave 4 equals ABCDE triangle correction, and you would be looking for a wave 5 up with another 1, 2, 3, 4, 5. Right, so that's what we're looking for. That's where I'm kind of expecting right now in Boyle and UNG. We're also going to take a look at the futures. Okay, we had some very controlled selling right here. Okay, you guys need to be able to spot the structures, identify controlled selling versus panic selling versus capitulation, different things like that. We'll go over all of the different chart patterns that I've been looking at here on the 4-hour chart for the futures. And then we're going to zoom out a little bit and go over the monthly supply and demand zones, so that way you guys can get a better idea of the big picture when it comes to natural gas. And then we'll also take a look at cold and the bear flag we have. Now, I did paper hand my cold puts, all right? And the last video, I told you guys I had puts on cold. We actually got a look above and fail here on cold, where we looked above this trend line here. We failed, which is actually a bearish signal, and cold dropped a huge amount today. All right, it closed down about 8%. All right, and I definitely sold those puts too early. They would be well in the money, but you're not going to be a perfect trader. You're not going to get every single trade right. As always, you guys can email me at any time for one-on-one personal sessions. All right, exactlytrades@gmail.com. I've had sessions with people down 4 figures, 5 figures, 6 figures, even 7 figures when it comes to oil and natural gas. So if you ever feel like you need a little bit of help, or you want to learn about some of the different techniques or strategies that I use, you can always email me for a one-on-one session, and we can get that set up for you, okay? Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. So, apologies for the lack of uploads lately. My son was just born like about a week ago, in between 1 and 2 weeks ago. So, I've been pretty tied up with him. He's actually sleeping right over here next to me. And cold is going to be the first one that we're going to start off here. Okay, we had a 1, 2, 3, 4, 5 up. And after you get that, you would be looking for an A, B, C down. Okay. Now we have this nice bear flag here. We finally just broke through this trend line. If we zoom in a little bit, okay, I mentioned a look above and fail. This is something that I mentioned in previous videos, but it's a bearish signal, okay? Because once we come through here and we break this trend line, this is the chance for bulls to really step in and retest and push up higher, right? If they fail, which they did right here, all right, the reason it's so bearish and it's a bearish signal is because this was the full opportunity here for bulls to take control. They did not take advantage of that opportunity at all. And it shows you who's in control of the price action, which in this case is the bears, right? And we see it comes down to the lower end of the range, and we actually gap down through that range. We're below the year-to-date anchored VWAP, the month-to-date anchored VWAP, and also the weekly anchored VWAP. All signs are leading bearish on cold at the moment and in the hands of the bears. Now, this could change at any moment, and cold could get back above there. But remember this level here of $60.36. I mentioned that this was going to be a very significant level. And once we flipped and, really stayed below this level, that's when we are ultimately going to be bearish on cold. And you can see, we did get below there a few times, but we kept bouncing here on the year-to-date anchored VWAP. All right, and then we had a little bit of liquidity grab. We jumped back up. All right, and then we got that look above and fail, and cold is now dropping like a rock. So if this was to play out, right, one thing we could do is we could come here, we could take our flagpole, okay, we could kind of just duplicate this and get a rough target of where this bear flag potentially could take cold, and that's back down into the 30s. Now, I'm not saying that that has to happen. Natural gas is very volatile. But that's what some of the technicals are saying on cold. If we take a look here at our MACD, the MACD is very close to rolling over right now. Okay, when it rolled over here and the red line crossed below the yellow line, that's a sell signal. And you see we had a very strong push down from the high 80s all the way down to the 50s. So that was a $30 drop right there, 30-point drop. You see when it curls back up above, we have bullish momentum. When it curls down below, bearish momentum. I've gone over the MACD in several of my videos, and it's very, very close to rolling over right now. So, if that does happen, that could be another a potential sell signal, and we could see this bear flag really play out. Now, you need to be cautious of it curling up to the upside. If it starts to curl up to the upside, then a little bit of the momentum is going to be coming in, and it's not going to be as strong of a sell signal. Now, let's go ahead and hop straight into BOIL, because I know you guys are all very interested in BOIL, right? And if we zoom in here, all right, we're pretty much following the analysis to the T right now. I mentioned that, we basically have had this huge move down, okay? And we're looking for a ABC correction to the upside, anywhere from $89 all the way up to 116, are going to be some of the price targets. If we look at our purple year-to-date anchored VWAP right here, you can see that that perfectly aligns up right around that $89 price level. So that's pretty interesting to see. Now, I mentioned the cup and handle, right? So here's our cup right here, and we've been forming the handle, and it looks like we potentially could be getting the breakout. Now, we do need to break out above these highs over here. So if we were to just draw a little bit of a zone, we could call it, okay, right in through here. This is where we need to break out above, all right? It's going to be right about $75 up here to about $79. Let's just call it 80. 75 to 80 is going to be really big resistance. If we can break through there, that's when we have the potential of getting that $89 price target. Okay. Now, in this ABC that we're tracking here in orange, you should have a 1, 2, 3, 4, 5 up, and then you should get an ABC correction right here, and then you should get a 1, 2, 3, 4, 5. So it seems like we've completed our wave one up. We don't know the exact measurements right here, okay, but we're going to see, it seems like we're starting to get the wave one up. We'll be pulling back. We're testing that 38.2% retracement level of support here at 64.65. So if that can hold, okay, then we'd be looking to go higher, but I really wouldn't be surprised to see if BOIL just pulls back a little bit. All right. Again, we're going to be looking for a 1 up, 2 down, 3 up, 4 4 down, and then 5 up. Okay, and this is on the daily time frame, right? That's what I'm really paying attention to right now. If we go into UNG, okay, and take a look at UNG, UNG looks pretty similar, okay, but it's much closer to its year-to-date anchored VWAP. Now, with UNG, all right, we can see we have a nice 1 up, 2 down, 3 up, and then the 4 here looked a little choppy, right? But this is actually, I drew a channel right here, but you could draw a little bit of a falling wedge if you wanted to. But this is basically a falling wedge A, B, C, D, E correction here. And the E is going to mark the bottom of your wave 4, and then you'd look for the breakout to the upside. And it seems like that's what we're getting. So, if natural gas wants to keep this bullishness up, it could extend further up to the year-to-date anchored VWAP on UNG, which is going to be around 774, and maybe then that's when we get our 2 down, 3 up, 4 down, 5. Right now, I'm targeting about 821 on UNG. If it wants to continue this rally and really get a strong wave 5 up after this ABCDE wave 4 correction. Again, here you look at the MACD, okay, you can see the MACD is about to curl up above, and that's been a good buy signal, right? We see it over here, nice buy signal. We see it over here, nice buy signal, nice push up afterwards. We see it over here, nice push up afterwards as well. So, if this curls up and then we end up seeing that MACD on cold, which is the inverse of these go down, then, those are all going to be bullish signs for natural gas. Let's go ahead and take a look at the natural gas futures real quick, okay, so we can get a little bit more of a big picture. We'll start off here, we'll go to the monthly chart real quick just so you guys can see. And so what we're looking at here is, we've been reacting very, very strong, right? When we zoom in a little bit more, you can see that we just barely wicked down into this demand zone, really for the last month of 2022 and really, the beginning of 2023. Each time we came down into this demand zone, we saw strong demand and we saw buyers continue to push things up, which is a good sign. The main thing is we're battling this overhead supply zone, which is about 225 up to about 264, 265, let's call it. Okay. That overhead supply zone is an area where natural gas has been struggling. Okay. And things like Boyle and UNG, they, move up and down based off of the future. So the futures really need to consolidate through here and absorb this overhead supply. And once they are able to absorb that overhead supply, that's when we have the chance of creating a demand imbalance, which would push us higher, targeting our next overhead demand zone, or I'm sorry, supply zone. Right. If we look in the past, and remember, this is a monthly chart, so this is much more macro. This isn't going to be super quick moves, right? We're not going to see this move happen, in one single month. I mean, we may, but I'm not expecting that, right? But if you take a look, we established this demand zone here back in the past, okay? And each time we came down and we just wicked down into it, we saw strong demand, right? Which is what we're seeing now, right? We're coming down, we're wicking into it, and then we're seeing strong demand, and then we push up into our overhead supply zone after testing it previously in the past. So this is, a good example of a possible scenario that could happen, right? Over here, we're testing the demand zone. Over here, we're testing the demand zone here. Then we push up into this supply zone. Then we pull back and consolidate here. And then we actually end up breaking through that supply zone after testing it and forming it over here, right? So, there is a possibility natural gas may need to pull back a little bit and then come back again and retest this overhead supply zone before we can see it break out to the upside. Right. That's just, one thing you may want to consider. But for right now, we're seeing lots of, good activity from buyers and showing lots of demand, especially when you zoom in on the smaller time frames. Right. If we go down to the 4 hour, which, this is really, really very helpful for short-term trading, things like, Boyle, Cold, UNG, right? I showed you guys these different patterns, all right, the different things that I look at right here. We had a rising wedge. We had a gap down. That's what this box is right here. These gaps, they fill about 90% of the time historically. And so if you see a rising wedge, okay, and then you get a perfect textbook breakdown retest of the trend line, which we also rejected the year-to-date anchored VWAP right here, then you should know, all right, that there's a strong chance we could come down and fill this gap down, all right, which is what we ended up doing. All right, then you can see we had another gap right here. We ended up filling that gap very quickly. We had another rising wedge over here as well. But this is that smaller time frames where I was telling you guys, you can see as soon as we come into this demand zone, we're seeing buyers, right? This is a 4-hour chart. As soon as we step down into this demand zone, we shoot right back up, okay? Over here, we shoot down into the demand zone, we shoot right back up. That's good. That's what you want to see. That's strong demand. That's showing a strong presence from the buyers. And then over here, we ended up creating a head and shoulders pattern. All right. And we came through, essentially and broke the neckline here, had a very clean head and shoulders. And we actually formed an inverse head and shoulders right afterwards, right? Where we had the left shoulder, right? Then the head, then the right shoulder. And then I gave the neckline. I said, watch this neckline here. We have an inverse head and shoulders. And sure enough, that move played out perfectly. We came right up to that supply zone. So showing that there's still strong supply imbalance up here too as well. And as soon as we hit that, we saw the pullback, right? And once we did that, we formed another rising wedge here. But I mentioned that, this doesn't have to play out. These are just chart patterns as they are forming, right? So, you want to stay ahead of the game and look at patterns that are forming, but you don't want to, play the game ahead of the game, right? You want to stay ahead of the game and look at the different possible scenarios, but you don't want to bet on something that hasn't been confirmed yet. So in this case, we got very controlled selling once we broke this trend line here, and we didn't get a breakdown retest and really a capitulation to the downside. What we got was a very controlled selling, as I mentioned, and that's exactly what this looks like to me. We came down here to that year-to-date anchored VWAP, grabbed a little bit of liquidity. Okay, remember, institutions, hedge funds, market makers, they buy and sell based off of the volume weighted average price. Okay, and so they want to beat the volume weighted average price if they're buying or selling. So when they're selling, right, they're selling up here, above the volume weighted average price, and then maybe they're taking some profits down here right around the volume weighted average price. And when they're looking to buy, they want to buy below the volume weighted average price and sell it above the volume weighted average price. Okay. That's how you want to think of the VWAP in anchored VWAPs or just the regular VWAP. That's kind of like the whole thesis behind it. Now, right now, we have a curling up week to date. We have, a month to date anchored VWAP that's kind of flat. And then our year to date is kind of flat here as well. So if we can get the year to date to start to curl up and we can get this month to date anchored VWAP to start to curl up, those are going to be bullish signals, right? But at the moment, we're currently above all three. So the favor is definitely in the bulls, right? The bulls have the momentum. And this basically shows that your average buyer of natural gas futures on the year, okay, on the week and on the month are all green and positive up here. Okay, so just showing that momentum currently is in the favor of the bulls. I mentioned a look above and fail pattern previously in this video, and that's something we want to be cautious of, right? So, we have this breakout right here. If we come back down into this range, that's going to be a bearish signal, okay? Because the opportunity for bulls to really push price higher is going to be on a retest of this trend line, and then we would look for the push higher, right? This is where bulls would step in and show that they have control of the price action, that they're going to push things up higher. If they don't do that, it's going to show you that, hey, maybe this was a liquidity grab right here, and maybe bears are the ones who are actually in control of the price action, and it's going to drive price closer to the bottom of the range. Right, these are some of the things that you want to consider in the market, whether it's natural gas, whether it's other things besides natural gas. And hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel, share it with a friend. Okay, I'm doing natural gas videos every single week. This weekend I'm going to try and do one that's a little bit more fundamental based and go over some of the recent news surrounding natural gas. All right, don't forget, you can always email me too for a one-on-one personal coaching session. And we can work on scheduling a time together at zachleytrades@gmail.com.